Conflicts abroad have introduced a stale start to the week. With the broader markets correcting its initial fall we spoke of, a continuation to the upside may be in the cards, and it looks like two very distinct time frames may just have exposed that probability. Welcome back to the channel on this happy Monday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill him. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive into ticker symbol FNGR. And what we are looking at here is actually the daily time frame. So I do believe that I have some interesting concepts here for us. I guess we can call them that, right? So as you can see right now, it is about 4:39 p.m. After hours, right? This is Pacific time. So we're looking at $6.15 in the after hours trading, right? With a traditional close at $6.04. Now, the true question here is what are we going to do? Where are we going from here, right? Because if you were streaming with me live, it was quite the show. It was to tell you the honest truth, I stayed cash until about 11. You know, this was around an hour actually after my son had woken up, and I got long the SPY for a 51% trade to the upside. Now it was actually very little risk too, because there was no it was hard to find confirmation today. The indecision in the market, it was just real, right? So that upside was actually curious to me because that also started assisting a lot of assets, including FNGR, right? So I want to know what the deal is here with the situation abroad as much as anyone wants to. But we can also just observe price action because this is our psychology here. Right, so let's go ahead and get that done there and see if we can bring an edge at least for the coming days. Now, I want you to focus on the SMA 10, which is the 10-day simple moving average within the daily time frame of FNGR. Notice how we came back to test it, right? So that is actually the SMA 10 getting tested 1 and 2 times after we reclaimed it. Now, mind you, this is actually Thursday. So, right, this was on Tuesday last week. We failed it entirely. We came right back up and we tested the resistance of the SMA 10. We came back down. Then we tested it one more time, officially breaking out of it. We opened this candle. We tested it officially for a breakout. And now we have tested it one more time. And what I can say here is that this is the first clean break out of the SMA 10 without us touching the SMA 10 or having a wick or any exposure below the moving average, which is usually a confirmation for a continuation to the upside, right? So now, of course, this isn't a bulletproof strategy. What I'm doing here is starting you off with the very basics before I can continue on and validating a potential upside, right? So now that we have this SMA 10 acquired, notice as well that we are now starting to close the candles upside of the Gaussian band. So now we have 2 candles closing outside of the Gaussian band. So that usually means that we are preparing for a clean break, right? So if we can get now another daily closure outside of the area of $6, meaning no wick or exposure to the downside within the bands, that would be pretty damn bullish for the asset, right? So let's go ahead and move on to the next chart and see what we have. So now, when I told you in the introduction that I have 2 very distinct time frames, this is what I mean, right? So the daily time frame, first of all, what I just told you here is an incredible amount of information that can suggest a continuation to the upside. The next time frame would be the weekly time frame. Now, why would that be? Well, if we observe here, the 9-day exponential moving average, right, the EMA 9 here, is sitting at around 569. Now, relative to the price action, I mean, we very well could have used this as a test, right? Not always do we use a test and it touches perfectly to the moving average. Like, for example, here, right, we break outside of the moving average, we came back down, and we didn't actually touch it, right? It could have been a 3-day exponential or a 5-day exponential, right? So it's okay to kind of average that in there like that. So this may be what we witnessed today, right? Coming down to the area of about 584, or what was it? 580. Wow. and having the 9-day exponential moving average down there around 569, 570. So that's why I'm kind of leaning towards, you know what, this is actually a pretty good test to the downside and a continuation of it. Not only that, is that, yeah, we faced that downside here in the previous week, right? That huge attack that everybody's talking about, right? So that actually came back down to test that EMA 21 before an immediate recovery. So, okay, that's already looking pretty good for us, right? So let's go ahead and now move on to the next chart and see what else we have in store, because I promise you, I didn't even have a plan to create this video here. All right, so yeah, so the 4-hour time frame is actually showing something pretty bullish, right? After this downtrend here, we're printing this inverted hammer, and now we have a confirmation, well, potential confirmation, because this is going to be over in 15 minutes and 18 seconds at the close of the market. After hours, sorry. So yeah, usually when you get an inverted hammer like this, that suggests, you know, a recovery here, right? Or a retracement, reversal, whatever it is. Now, if the following candle would be the validation candle for this strategy here. So it's looking pretty good. Currently sitting, I mean, you know what can happen within 15 minutes, right? So, but so far, yeah, this is looking pretty good. And within this 4-hour candle, we've actually seen up to $6.21. So yeah, I do think that this would be the validation candle in the after hours trading for a continuation to the upside here, specifically to resist maybe within the area of around 624. I guess we can give it to around 629, right? So let's go ahead and move on to the next chart here, because yes, this is it's pretty good to consider what happened all today, including in the pre-market hours, right, where we came all the way back down to test that exponential 55. Now that has a specific role to it too. The reason why we actually got this upside here, other than the fact that of course we have a strong retail purchasing and all that good stuff, nonetheless, right? It's just we have a silver cross right here, right? Usually price action tends to act very positively when we get a silver cross, which consists of the EMA 21 crossing upside of the slower EMA 55. In this case, we just, we got this break into the upside of both of the moving averages. We test it, and rip right on that crossover, right? So now, as per usual, regardless of this planned downside here, the rules appear to be continuing to trade just like a normal ticker would trade, right? So we got that blast off to the upside, faced a resistance from a relative level, and we came back down to test not only the EMA 21 and not only the EMA 21 but also the EMA 55. Silly me. And that usually is the case when you get a silver cross. We come back and test the validity of that moving average crossover strategy, right? So, and now we're showing the signals of a potential retracement or a reversal, right? So now let's go ahead and continue on to the next chart. And you guys already recognize this. This is the daily volatility versus momentum backtest paired with the ABCD strategy that we've been looking at and observing here for the last, week or two. And it's still playing out. It's still playing out the way that it should, right? It doesn't mean that we can't come back down for any reason at all, but it looks like, it could be a zigzag here to eventually reach the top side target of C, which would be amazing. No guarantees in the market, right? But it's still important for us to observe the strategy nonetheless. And another very important fact here is that, yeah, we're actually getting that shift to the upside. We spoke about this, I think, on Thursday and maybe even on Friday too during the live stream, where we were actually admiring that we're getting an upside pivot on stochastic momentum on the daily time frame, which is in all essence a confirmation that the statistical move is in fact still on, right? So, and what I'm speaking of here is specifically this: anytime that volatility has contracted into critical zones, such as this here within the 15 percentile, this is actually a very bullish thing, because mathematically said, volatility would expand upon contraction, right? So in this case, yeah, we're getting a very nice read to the upside. So as long as volatility is not at either critical zones of critical expansion or critical contraction, this the data set is still valid, right? The signal is still fired. And this, just to be completely clear here, these are all of the samples that I've gathered throughout the entire trading history of the asset on the daily time frame. Any other video you go back and you'll be able to catch exactly what I mean by the criteria here, right? But there is a certain criteria in order for us to meet the firing of a signal, right? So, but upon the firing of the signal, I have measured throughout the entire trading history the duration, the upside thrust versus the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly. In this case, yeah, out of 20 times total, 17 have been guessed correctly to the upside, giving us an 85% probability. To be perfectly honest with you, I don't like that it's only 20. And I haven't really voiced this as often as possible, but to create a true statistical, I guess, behavioral metric, or something that we can observe with higher hit probabilities, would be at least 100. I mean, not at least, actually, it would be around 140 iterations. I mean, something around 50, 60, 70, that's all good too, even 40, right? But it's more iteration would always, it would help greatly for future outcome. In this case here, you have several metrics to kind of go off of, right? I've also calculated the upper bound of the first standard deviation and lower bound, and the standard deviation itself, which would be 68% of the results. Lower bound would be down here, and your upper bound would be over here, right? So that's looking like it could be a probability, which honestly, the upper bound of the first standard deviation landing at 68.52% would be around the target that the 2.618 geometric mean is landing at. Not only that, is also a very similar target to where C is located from the ABCD strategy. So all of these things confluent to each other usually end up with a pretty positive outcome. It doesn't mean that we're going to reach all the way to the top of it, but I like that it's rhyming that well, right? But what it does mean is that we have an upside to observe, and we have to respect every resistance on the way up, historically speaking. Right, so let's go ahead and move on to the next chart and see what else we have here. Okay, let's just dive into that RSI. So 30-minute immediate short-term time frame is looking pretty good here, actually. So we're definitely with an upside on that RSI signal represented by the baby blue line. The SMA 14 represented by the pink line is starting to show a little bit of an upside bias too, both of which are located right in the gravitational zone of the bear weakness percentile. So this means that we can get pulled to the upside here, but doesn't mean that we can't get pulled back like we did on this iteration here and on this one here too, right? So we have gravitations on every single junction here from the RSI, but still a standard setup: 70% overbought, 20%, 30% and below oversold. And yeah, so let's go ahead and take a look at the bi-hourly time frame here. Bi-hourly time frame pivoted towards the upside. It is now outside of the gravitational zone from the bull weakness, which means that it wouldn't get pulled down here, or it would be a lesser likelihood of it getting pulled down. So now moving on from that, we have the 3-hour time frame. I can go ahead and just jump onto the 4-hour. The 4-hour time frame is in fact showing us a bounce from the SMA 14 and a continuation to the upside. If that is the case, then I can see a very short-term pullback in the bi-hourly time frame, and it would be very short-lived before a continuation to the upside, as the 6-hour time frame is also bouncing from that SMA 14 with an upside pivot. Now the 8-hour time frame is outside of the gravitational zone, which gives it a higher likelihood to combat the SMA 14 as a resistance. It would actually move upside of it, and there is a good chance of it seeing that the immediate short-term time frames are shifting towards that upside. Now, of course, we still have 8 minutes left to close price here on FNGR, and that's going to determine a lot of things from there. But yeah, the upper time frames, these are all either facing a downside or consolidating due to the kind of the need here for the immediate short terms to really determine or guide price action towards that direction, right? So yeah, we're currently still sitting at $6.15, 4:52 p.m. Pacific time. I think tomorrow we may be able to see some chop around, right? We'll go ahead and still cover it during the live stream. come around 6:40, 6:50 a.m. Pacific time. Apologies for showing up a little late today, guys. My son had a little bit of trouble, but we're all good now, and everything is looking okay. All right, team. So please consider coming by the live stream, and we'll go ahead and take a look at this ticker and others. Right, lots of price action happening today. But yeah, appreciate you for coming out, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever, never, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night, and I will catch you at the bell. Mañana. Adios. Yeah.